I had a conversation with my friend Lauren from Adulting is Easy. You can find her on Twitter and on YouTube. We talked about real estate versus Bitcoin. I hope you enjoy the conversation. If you want to, you can skip through the topics. They're all in the description and the timestamps below. Hey, Lauren, we've known each other for a little while. I think we first met when we were sharing each other's content on Twitter. Back then, I had no idea about Bitcoin. I knew nothing. I'm sure you may have been in the same position. But now, I think over time, we've kind of changed. What's your I guess level of knowledge with Bitcoin, just so my audience knows who they're listening to.
Yeah, so my name is Lauren Keene Almond. I'm based in the Tampa Bay area of Florida. I am super passionate about personal finance. Over the years, I have really gotten into real estate primarily and stocks and a teeny bit of crypto. But as someone who has a personal finance podcast, which I do, called Adulting is Easy, I always feel like it's my responsibility to my audience to understand, to at least have a very high level understanding of all kind of the different areas. And of course, just in my personal life, I'm going to get questions about these things. I'm going to get questions about, hey, Lauren, should I flip houses? Hey, Lauren, where should I put my emergency fund? Hey, Lauren, what should I do? Have you heard about crypto? Have you heard about Cardano? Have you heard about Ethereum? What's up with Dogecoin? Like, did you get rich on that, Lauren? So for all of those reasons, I just started researching a little bit. I've had a couple of crypto conversations on Adulting is Easy. I've read the Bitcoin Standard and done some of those things. And I think the best way to understand this stuff is to get a little bit of skin in the game. So I bought just a very small amount of Ethereum and Bitcoin through Webull a couple years ago. And it literally like $1,000 just so that I was watching it a little bit and understood it a little bit more. But yeah, just very high level understanding. And I'm definitely not going to be I'm not really a maximalist in anything. Like my husband has an engineering firm. We have stocks, we have real estate. We're very, in a lot of ways, diversified more than a lot of people are in the space. And it doesn't get you as many clicks if you're not like a crazy maximalist in any one thing or the other. But yeah, I basically have a very high level understanding of it and the technology and blockchain. I could not tell you about anything really other than Bitcoin when it comes to crypto. I'm kind of aware of the other ones and, some of the smart contracts and things like that with Ethereum that I've looked up and that use case. But in general, I'm pretty novice when it comes to this side of personal finance.
That's perfectly fine. I think that's where everybody starts. At a point, I did my CFA. I did all three exams, one of the most difficult exams in the world. But I mean, I had no clue of how money worked, right? So all that knowledge was just built on a foundation that we would continue using US dollars forever.
Absolutely.
And I think that's the problem. Do you understand the problem with US dollars? I think I'm sure you do. What could you explain the problem with the US dollar?
Well, what I recall about the Bitcoin Standard, and I have a finance degree from the University of Florida. It's been a while since I did that. I got the graduate certificate in personal financial planning from Boston University in 2021. And all through there, as you know, it doesn't tell you a lot about the history of currency. It doesn't really explain to you much about the supply of money and how money gets its value. And it's like anything. I guess if you want to take a real estate example, it's like the house has value because somebody wants to buy it. Money has value because we can be taxed on it, we can be paid in it, and we can trade it for goods and services that we want to buy, right? That's the general idea of money. But what made a lot of sense when I read the Bitcoin Standard, for example, which I know is very entry level, but like it used to be tied to something. It used to be tied to gold, right? A precious metal, something that is very scarce, but also kind of hard to store, kind of hard to mine and expensive and all of those things. But it was tied to something. I believe it was, I don't know, World War II or maybe the Depression era, somewhere where we went away. Maybe it was after that. Was it after that? You can tell me. Where we went away from the gold standard and then it was just sort of supported by its own self. And that's the scary part, I think, is it really is kind of a fake thing. I mean, it's not quite as fake as monopoly money, but basically because we can be taxed in it and because of the US government and the power that we have in the world, the dollar has value. That's my very basic understanding of it.
Yeah, that's essentially it. I mean, in 1933, there was a Executive Order 6102, where the U.S. government essentially confiscated everybody's gold, and if they were caught having gold, then they could get fined. They could be charged something like $10,000, which back then was a lot of money. They could go to jail for life just because they're going against the government. And that was, I think, the first step towards just stealing people's gold. And at that point, the way that I see it, there was no need to invest. I mean, you could invest if you wanted to, let's say, take a risk and increase your purchasing power for the long term, but otherwise, you're just holding gold. You're just saving in gold, and you're assuming that, let's say, you save a certain amount of money today, the value of that money will be retained 10, 20, 50, 100 years into the future. And that seems to have happened, right? Because back then, I'm not sure if you've heard of this, but in general, you could buy a men's suit back then. You could buy a men's suit today with 1 ounce of gold. And that's been the case. Even as technology improves, of course, technology improvement seems like prices should come down, but it seems like at the same time, gold's production is also increasing, meaning that prices don't actually come down, they just stay stable. So gold is the real judge of inflation, I would say. If we're producing more gold, we're adding a little bit to the economy and that inflation is happening. But over time, prices are staying consistent, which I think is the way it should be. But then in 1971, so in 1933, only the US citizens were impacted by this. But then in 1971, the US government basically took everybody's gold. Over time, they took everybody's gold. Over the next 40 years, because of the Bretton Woods Agreement, they took everybody's gold. They kept it in their vaults. And in 1971, they essentially defaulted on their loan to all of these other countries. All these other countries had loaned them their gold for US dollars, and they defaulted, right? And then from what I know from the numbers that I've seen, house prices have gone up, stock prices have gone up because people need a new way to save. They can no longer save
Right.
in dollars, and that was the problem. In my perspective, that's the problem. Any thoughts on that?
Yeah, my first thought is I understand why we went away from the gold standard because if banks were transacting with each other in large and large amounts, you could get to the point where you have to like ship somebody a bunch of gold. And that
Yeah,
is very cumbersome. So, in a lot of ways, like the logistics of moving gold, I understand that. And then the cost of mining it. So, I understand going away from it. But this idea that, basically what you're saying it sounds like we had to transition from saving to investing because you could just save gold. You could just have like a pile of gold or I guess bullion or whatever, put it in your safe, bury it in your backyard. And it was fine because, like you said, it was going to hold its purchasing power because you could buy the same amount of stuff with it, the same things with it at all times. And then now this idea that if you hold on to if you bury, forget gold, if you bury like $10,000, bury like a few stacks in your backyard, you dig that back up, it is not going to have the value that it did have. And so because of that, then everybody's taking all of their money and they're investing in these different assets. And because of the laws of supply and demand, that's driving their prices up.
yeah, exactly. So as more and more dollars keep adding to the economy, keep getting added to the economy as the U.S. government borrows more dollars, as the Federal Reserve prints more and more dollars are chasing the same number of goods. And then on top of that, like with government spending, what they're doing is they're competing with companies for labor. So let's say they keep taking labor resources out of the market, they keep adding it to their own, I guess, their own jobs. They control more people, they have more people reliant on them, and they can only do this because they can print as much money as they want to. Right? On a gold standard, they wouldn't be able to. They'd find ways to cut expenses wherever they could.
Yeah.
At least that's what a rational government would do. But in this case, not happening because they have
That's
that
been the
ability to just
hardest
keep
thing.
printing.
My sister is 21 years old, and I don't think that she can remember. There's no way, because not in her lifetime have we really had a low deficit. I mean, when we were kids, I mean, what was it? At most like $1 trillion? I don't know. I think we're
Yeah,
similarly aged. I'm 35. It was like $1 trillion.
yeah,
I mean, that would be an absurd idea to somebody that's 21 years old, that we used to not have this huge deficit. And the problem with where interest rates are now is they're going up. So the greater percentage of our budget has to go to just doing our debt service, just paying the interest on all of our loans. And so we're going to be at a point where we're taking more loans just to pay the interest on our other loans. And I truly, I'm not an economist. I've taken a couple of it, a couple of macro and microeconomics. I got one B in college, by the way, and it was macroeconomics. So I'm was a B plus, but I'm probably not qualified on this. But it's like, just it seems like there's a problem, and I don't understand why everybody can continue to act like it's not. Like, why is it okay now? Well, my dad says, think of it like a balance sheet, a statement of net worth. My dad's like, yeah, we've got this much debt, but what does the other side of the balance sheet look like? And that's fair. I do that in my own life, right? Let's say, just for round numbers, let's pretend my net worth is $3 million. So let's pretend that my assets are between 5 and 6, and I've got $2 million worth of loans. I am comfortable in my personal life. Again, these are sort of close, but kind of made up numbers. I'm comfortable with those numbers. I am comfortable with $5-6 million in assets and $2 million in debt, and the difference is my net worth. So that is an interesting way to think about it. So my dad, boomer that he is, doesn't seem to be super concerned about all of that. And I don't know what the answer. I don't know what the answer. Like, what is that other side of the balance sheet? If the other side of the balance sheet is like $100 trillion, then maybe 30 trillion in debt is okay. I don't know.
I think the problem here is that, I mean, you have a certain amount of debt, but the problem here is that if you if you lose the ability to service that debt, then you essentially can lose everything.
You can lose it. Exactly.
Right? That's the problem. So with the US, for example, have you seen the US debt clock by any chance, the website?
Yeah, I've seen it. I mean, it just
great.
Yeah, it's just ticking. It's like ticking like a clock, but it's just going up and up. And it says doesn't it say like per person what it is too? And it's like, oh man, that's my share of the US debt. That's really horrifying when you see it.
It's scary because the people who aren't even born yet are the ones who are going to pay for it.
And I don't even think people. I can't say this enough. It hasn't always been like this. I mean, in the history of the United States government, this is a very new thing that is happening. Having this much debt.
Yeah, and I think people assume that we're never going to pay it, but we will, and we'll pay it with a lower standard of living. Right?
Yeah, I mean, how are we going to do it? I mean, I guess an argument could be made that if we can keep the economy humming on such a high level that we can keep taxes where they're at, but because there's more participation maybe in the labor force, or maybe people are making more, thus paying more taxes, maybe we can generate enough taxes. But I just don't see how we can pay that off without taking more taxes. I mean, I guess there's this argument for tariffs, but I just don't know how well those really work. I mean, you need to ask these questions of how are we going to pay these off? But B, how does that affect me, my family, my kids and grandkids down the line?
Yeah, that's one of the crazier things there too. So taxes only cover 70% of the total expenses at this point. So regardless, even if they raise taxes by $2 trillion, they can't. They're still only breaking even, and they still have to pay this interest on the debt.
Right.
That just means that the 30.
Can you tell me? This is pure. I'm just showing how ignorant I am. If we could talk about real estate, that'd be great. Then I would sound smart.
Of course.
But is any of that floating? Is any of that debt like a floating rate too? Because that's another. Or I guess it doesn't even have to be a floating rate. We could be paying the stuff that's at 2-3%. And then having to take out new debt at 5, 6, 7, which is sort of the same thing as it being a floating rate debt. But that's the problem. If this stuff keeps going up, and that's why we have to that's why the Fed has to drop rates. A lot of people talk about it like with mortgages. We're like, oh yeah, we need to drop it for mortgages and for the economy and for no, we need to drop it so that our interest isn't as high on our debt to other people. That's actually part of the problem.
That's exactly it. You just explained it. I mean, I think you did a great job with explaining it. But over time, as the younger generations have fewer and fewer kids, how's the workforce going to grow? Right? I think that's the issue. But so that goes into real estate. Actually, that goes right into real estate. I've spoken to a lot of real estate investors, and they don't like Bitcoin because Bitcoin doesn't provide cash flow, doesn't provide tax benefits. What are your thoughts on that?
Bitcoin is interesting because of the volatility. I mean, the biggest volatility that we've seen in the real estate sector was obviously 2008, 2009, great financial crisis, formerly called the Great Recession, which I sort of liked more. But we still had, the assets at the end of that. And that was really a blip. you get this 50% decrease. And I think that year was like a 33% decrease in the stock market. But we haven't had as much volatility since then. A lot of that is because, which we don't really love, right? But greater regulations, you have to put more money down. They underwrite you insanely nowadays. I mean, the difference between even when I bought my first house in 2012 to the one I bought 2 months ago, still an astronomical difference. And that's all post great financial crisis. But in Bitcoin, it's like you can have that 50% drop in like a month. I mean, you would know better than I would. I don't keep that much track of it. But I mean, you can have, and I mean, we're talking like it swings. You can see it too. This is another thing that I personally like about real estate is that it's not liquid. So I think that's a feature, not a bug that we don't really know. I can't tell you exactly what my properties are worth. I fill out my net worth sheet and we're like guessing how much the engineering firm's worth. We're kind of guessing how much our properties are worth. We don't know exactly. If you're heavy into stocks or Bitcoin, you know
Yeah.
every minute of every day what your net worth is and what that stuff's worth. And I think that can be a really touchy situation for investors. But at least the stock market closes at 5 and holidays. And Bitcoin, it's all day long. I mean, it can be just flipping and flipping and flipping. And so that's something that that I don't love about Bitcoin is how easy it is to transact, how quick your emotions can be about it. And we're talking 24/7 potential for emotional mistakes. You know what I mean?
Oh yeah, it's actually really scary. Like I'm sharing the chart for anybody who's not watching the screen, but I'm sharing the chart. You can see the trends. You can see the increase and then the drop, the increase, drop, increase, drop, increase,
Yeah.
drop.
So
But
let's talk about okay, where was the high? What was the most recent high of Bitcoin?
like right here,
72-ish,
70,
73.
almost 74.
Okay,
Let me
and
zoom in.
that's March. And now what are
Yeah.
we at? Where is it at?
Let's see.
63?
Okay.
Is that what it says?
Yeah. So it was
So
at 73.
that's actually a reasonable thing. But where have we been? Let's see, where's the lowest drop there? Let's see.
So it went to 73 and then it dropped to like
73 in
49.
March. So 73 in March and 49 in August. That's a lot. That's a lot of
Yeah.
volatility. And I could promise you none of my real estate has done that. And my stocks
Of course.
haven't done that much either. Right? Actually, the stocks are up and then like maybe down 5% and then back. I mean, it's that's the part that it doesn't really scare me personally because I think I'm relatively educated around personal finance, have a good foundation set. I mean, I remember during, March, April 2020, which my stock portfolio looked nothing like it does now. So I don't know, dropped, $100,000 maybe, which would certainly be a lot more now. And I remember being like relieved. I remember being like, oh, that's what this feels like. I always knew this was going to happen. I always knew there was some volatility in my stocks. So I think I could personally handle probably some bigger exposure to Bitcoin, but there's a whole generation of people, really. It's pretty generational. It's a lot of young people. It seems to me, just anecdotally, to be a lot of young men, particularly, that they get into this, and I don't know that they have that feeling. I don't know that they have the right expectations. I mean, they think everything goes to the moon. They think measly 10% S&P 500 returns are awful, or the 20% cash on cash returns I get from real estate. They think those are ridiculously low. And so those are some of the problems that I have with Bitcoin as an investment, because I think it can lead to really bad expectations and a lot of emotional decisions that can be made at literally a click of a button. I don't mean to
Did you say?
crap all over this, but that's what I think.
No, I completely get where you're coming from. I mean, I don't blame you. I thought exactly the same thing. I think because you're a stock investor, because you kind of understand the volatility, I think it'll be easier for you to wrap your head around why the volatility is there, right? And I mean, the way that I see it is this is a brand new asset, right? I mean, if you think
Yeah.
about it, 1% of the world owns it, and then out of that 1%, probably another 1% to maybe 10% truly understands it.
Right. And it's so
Right?
young. I mean, when did
Exactly.
2009? Was it 2009?
2009.
Yeah. I mean, that's recent. I
Yeah.
mean, if you
It's
think about, think about real estate, think about, I
yeah.
don't know, how old is the US stock market? 1800s?
Like 17, 1800, something like
something
that.
like that. That's, I mean,
200 years.
Bitcoin is so much younger than those things. So
Yeah.
yeah, I mean, that's a good point. And then as more money flows into anything, then individual transactions, even a lot of them, cannot move the needle as much as you can move it with Bitcoin right now.
Yeah. That's exactly what it is. I mean, the way that I think of it, the people who don't understand it are let's say the 90% who own it just out of sheer luck. Maybe they got in 2010, they started mining Bitcoin. They got so rich that they didn't put in the time to understand what it is. They just spent their time educating them or just entertaining themselves. And now, let's say Bitcoin's price is at 70,000 and they think it's going to come back down to zero. So they're like, okay, I'm going to get out. The Ponzi scheme is done. It's over. I'm going to sell everything. That's where the volatility comes from. And then
Right.
on top of that, we can see right here. So this is where I think the Fed started increasing rates. November
Mm-hmm.
2021. I think they hinted that they're going to increase rates.
Well, interesting that there's any correlation there, right?
The reason why there's a correlation is because people are so at the top here. Let's say when people buy here. So right now, I think the point we're at in the market is that we are at the point where retail investors are being shaken out. A lot of retail investors don't want to deal with the sideways movement. So we can see here, check this out right here, exactly the same thing. So moving sideways,
Yeah. So
and then it
for
just goes
audio, for people
crazy.
on audio, we're talking 2019. It looks pretty stable.
Yes,
And then,
exactly.
so what was the 20 after post COVID, or is that during COVID that it
Yeah,
started going up?
it was during COVID. So what happened during COVID is the Federal Reserve essentially brought interest rates to zero,
Right.
right? So that just made it easier and easier for people to buy Bitcoin with
Well, and they had to
borrowed
do
money.
something. I mean,
Exactly.
you certainly couldn't be in bonds back then.
That's exactly what it is. So what
Right.
happened here was a lot of people saw, oh, Bitcoin's going up, so I'm gonna put in as much money as I can, and then let's say they bought here. They didn't put in the time to understand it. They just got that instant dopamine hit
Yep.
where they see the price going up and they're like, "Oh, I'm a genius. I'm just going to buy as much of it as I can and I'm going to borrow against my house and I'm going to get a second mortgage and I'm going to do this. I'm going to borrow on a credit card to buy it. I'm just going to take as many loans as I can. I'm going to buy Bitcoin. I'm going to sell at the top."
I saw those stories. Yeah.
Right? And then but then that's what leads to these massive crazy pumps. But then what happens is some of the people who buy here, maybe they saw the price dropping and maybe they actually understand what the Bitcoin market is, what Bitcoin is, what how prices are determined, and they're like, "Oh, this is interesting. Maybe I'll dive a little deeper." And then they hold on to it. And then they hold and they hold and they just keep learning, keep figuring it out, and then they get to this point. It's exactly like real estate, right? I think what Bitcoin does is the volatility is the cycles are shortened essentially. Every 4 years, you're going to see a higher high, a higher low. That's pretty much it. And then over time, like even if you look at the cycles here, it's actually crazy how accurate that is. And the reason for that, do you know how the supply and all that stuff works?
Well, yeah, that's when it halves, right?
Yeah, so
That's the
that's exactly what
fascinating
it
part
is.
of Bitcoin, by the way. And that's why I think of all the crypto, Bitcoin is actually the most interesting and the most fascinating, is
Yes.
because of how the supply is predetermined, which is certainly much better than the Federal Reserve printing
Yeah.
money. So there's that portion of it. What I also love about Bitcoin is that we don't know who the founder is. I think that is really cool. And I almost think it wouldn't be able to be the premier cryptocurrency if we knew who Satoshi
Yeah.
Nakamoto is. I think
Absolutely.
those two things are truly a big deal and what set it apart from all the others.
I think one of the things that makes it so important that nobody knows who Satoshi Nakamoto is that you don't know what his his preconceived biases are. You can't judge him based on something that you have no idea about. Because if you think about it, there's people saying, "Oh, he's a Russian spy." People saying he's Chinese. People saying he's Japanese. People saying he's part of the NSA.
Well, it may
Nobody
not
has any
even
idea,
be a male. It may not even
right?
be one person.
Exactly.
I
Yeah,
I tend to think it's not one person, but
yeah.
just because
They,
of
they
the
thought of
complexity
everything.
of it, yes. And I think even in the early stages of the blockchain, I just think you would have needed at least a group of people to be operating it. So I tend to
Yeah.
that's just my conspiracy theory, is that it's more than one person. I guess my other side of it is like, maybe he's dead, because the thing that goes against it being being multiple people is that their bitcoins don't move, which
Yeah.
is a very strange part of everything too.
And then have you looked at mempool by any chance? Do you know what mempool
Never.
is?
No, never heard of it.
Okay, I'm going to show you something. I think this is really what blew my mind when before this, I started learning about Bitcoin. I read the Bitcoin Standard and all that stuff. I was left with a lot more questions than I had answered, I guess, because it just goes so deep, right? So what mempool is, this kind of like gave me that picture where it showed me, okay, this thing actually makes a lot of sense. It's based in reality essentially. Okay, so a mempool is it's the entire record of transactions. If
So these
you
are
go on this
these are
website,
these are what, blocks or nodes
these are
or?
blocks.
Okay,
And then every block is numbered. You can see here there's a number for each block. You can see if you click into one of these blocks, you can actually see every single transaction that's happened.
that's cool.
So I think the reason why I'm showing you this is because it feels like this solves accounting, right? It solves the ownership of assets. It solves government printing of money. It solves because nobody can print any money without everybody seeing it. So you can see here on this blockchain thing, on this mempool, you can see newly generated coins. We can see exactly how many coins were generated. So each Bitcoin can be split into 100 million Satoshis. Not sure if you knew about that part, but essentially
Yeah.
you can see every single transaction here, right? And it this is what showed me that, okay, this thing actually makes sense. And then
My
something cool.
question about this though
Yeah, of
is,
course.
I mean, we have like Visa, MasterCard. They process a ton of transactions and they use a lot of
Mhm.
electricity to do it too, which I think sometimes people like, when people that crap on like crypto, they're like, oh, they're just using electricity for it. I'm like, listen, you think Visa and MasterCard aren't using electricity to process this? You guys are insane. But
Yeah,
my understanding from my very menial research over the years is you could not code every transaction. If
no,
for every person that goes into the goes to a gas station, gets gas, gets packed cigarettes, gets gum, you can't actually code all of those onto the blockchain, which originally I was under the impression it could do that. But it just, my understanding is there's not enough processing power or enough speed, maybe, or maybe the work is just too hard now. I don't know, but can you talk to me a little bit, explain that to me a little bit?
yeah, absolutely. So, okay, I actually I want to. That's a really good question because I think that shows a lot more people because people have been complaining that, okay, this doesn't scale, it doesn't increase the number of transactions. You can only do, let's say here, you can actually we can see that right here, 2,471 transactions on this block. So every second, there's apparently something like 7 transactions per second. I haven't done the calculations, but it's 7 transactions per second. But these transactions on this block, we can when we look at this blockchain here, these are final settlement,
Right.
right? So it's like if I gave you a bar of gold, that's what the network is doing. It's giving you final settlement. Visa, Mastercard, they don't do that,
Right.
right? So with Visa and Mastercard, you're let's say you're a merchant. Let's say you sell a course or you sell a book, and Visa and Mastercard are the ones processing the transaction. They can cancel the transaction.
Right.
I
No, I
think
get that.
I think they
I believe me,
I
I've
think
had that. You think I haven't had a guest come stay in one of my short-term rentals and not do a chargeback? Heck yes, I have.
oh, of course. Of course, that's the problem, right? If if they do it through Visa and Mastercard, they're not getting final settlement. So on Bitcoin, this base layer is final settlement. So if I were to send you 1,000 Bitcoin by accident, and I send it to your address, I can't get it back unless I talk to you. I have to communicate with you. I have to get the Bitcoin back from you, and if we're on good terms, maybe you'll send it back to me,
Oh, I
right?
would
But I
send.
can't force you.
I'm the type of person where I would totally send any. I would send anything back that I got by accident, because I'd be.
Of
I don't
course,
know. I'm a little bit of a karma believer, I think. So I would,
that's it.
but that's a good thing and a bad
Yeah,
thing. Okay, because
of
let's
course.
talk about the Airbnb guest that comes and stays in my place. This is what happened. She came and stayed in my place. The one bedroom was upstairs, one bedroom was downstairs. The upstairs AC went out. So we put the person who was supposed to stay upstairs in the backyard in a unit where the AC was working. So
Oh
it's not
yes.
an ideal
Okay.
situation, but it's 4th of July. Couldn't get anybody to fix the AC, right? She gets upset. She leaves. they sign a renter's agreement. It says mechanical issues for any systems are not a cause for a refund. She has signed it. She does her charge back, whatever, right? And she wins after the 60 days and whatever. She wins. She gets her money back. And basically, I had her dead to rights. First of all, from a moral perspective, I felt like I remedied the situation. There were two guests. Just one was in a unit in the backyard while we were waiting till the 5th of July to get the AC fixed, right? But so I feel like she was in the wrong there. But what if if she had paid me in crypto, I would have had it. There would have been nothing she could do. But look at the reverse. What if she pays me in crypto? She gets there. The AC is not working at all. I don't have anything I can do to fix it. What recourse does she then have? Or let's say even worse, she gets there and the listing's fake. Listing doesn't even exist. That happens sometimes on Airbnb. Then she has no recourse. So that's, I mean, I see what you're saying, and believe me, we just bought our primary home, and we had, I can't remember what our cash to close was, 200 something thousand, and we can only send $100,000 wires at a time unless we go to the bank. And so I've got to take my happy self to the bank. Like, that's annoying. Like, don't get me wrong.
Yeah.
But my point is there's pros and cons to that, to having like no third party in between.
I mean, you could still have, let's say, lawyers. You could have, I mean, there are services that actually do this already. They do sell and buy real estate with Bitcoin, but what they do is they have an escrow service in the middle where they just hold on to the Bitcoin. Let's say, for example, if you were to go through Airbnb, this person's going to pay Airbnb through like some kind of escrow service. And then once everything is good, once everything's dealt with, Airbnb would move the money to you. I mean, I don't know what the procedures will be, but I'm thinking that's essentially what it'll be. Maybe they'll put some Bitcoin on hold. Maybe it's like putting a hold on a credit card essentially.
Yeah.
But then there's also Visa and MasterCard who are starting to participate in this, which is to me crazy because they're supposed to be working with fiat, right? And they're essentially giving you a bridge to spend. Let's say you save a ton of Bitcoin. Let's say you were in since 2005, or sorry, not 2015, and you've just been accumulating, and your Bitcoin has gone up 100x or 50x or whatever the increase is. You can just spend your Bitcoin now. You don't even have to think about it, right? And I think that's what makes things pretty easy. But okay, so that was what the layers thing was. So you were saying the base layer, they can't do as many transactions, and it gives you that security as a merchant. But you're only going to use that. Let's say if you were to buy a car. Let's say you were to buy a car and you have and you have to pay them, let's say 30 grand. You're going to give them the Bitcoin. You're going to get it checked from your mechanic. You're going to get everything done. You put it in escrow, and then once the transaction is good, you're good to go. I don't exactly know what the process will be. I mean, over time, we'll discover new things. I'm pretty sure pretty much every bank is going to play a part in this. They're gonna offer the escrow service, the service in the middle. But I mean, I think over time we're just gonna build better ways to transact, right? And then even today, have you heard of the Lightning Network?
Yes, but just heard of it. I don't know anything about it.
Okay, so essentially, what you can do is you can create a layer on top of the base layer of Bitcoin. It's like it's like Visa. Basically, anybody can start a Visa, right? There's a wallet called Wallet of Satoshi where they have a Lightning layer on top of Bitcoin, and then they have everything self-custodied. So if you trust them, you can use them. And then if you need to send transactions anywhere else, you can do that, even if they're tiny transactions. Like there's there's this app called Fountain where if you listen to podcasts, they give you little bits of Bitcoin. And in my Lightning wallet, I'm getting 10, 15, 20 Satoshis a day. And it's worth next to nothing right now, but eventually, I mean, it'll probably be worth a lot. And maybe I'll be able to use that Bitcoin to transact more and more. But then with Lightning, you can do 1 million transactions a second. Right? So I think the layers
they just clear
here,
them. They just clear them at some point.
Exactly. That's exactly what it is.
Yeah, that's how it has to be. Yeah.
Yeah. I think that's what's going to happen. I think if you have, let's say, 1 million Satoshis, do you know about the fractions of Bitcoin?
I just know about Satoshis.
Oh, okay. So 1 Bitcoin can be split into 100 million Satoshis. So let's say you have 1 million Satoshis and it's on Lightning and you don't want to keep it on Lightning anymore. Just move it to your wallet and you have full self-custody of it. I think over time it'll just get easier. That's how I see it. I don't know. Maybe I'm wrong. Maybe some other cryptocurrency is going to be the one that's going to have to deal with layer two transactions. Maybe you send your Bitcoin to Cardano and Cardano does all this stuff. I
Right.
don't know about that, but
Right.
the way that I see it, Bitcoin is the best layer. It's the best base layer settlement layer in the world, and really nothing can compete.
I tend to agree. The thing about Bitcoin, I guess maybe all cryptos, but definitely Bitcoin, is it an investment? Is it a currency? Is it a financial system? When it comes to real estate, I know what I have. And I
Yeah.
can super look at it, right? I know there's my apartment building. I own that.
Hmm.
Or when you have stock, at the end of the day, you have pieces of companies. When it comes to Bitcoin, what do you have? What's
You
under
have
there?
money essentially.
Yeah.
You have it's like another replacement for gold or another replacement for fiat, right? Because we use
So
fiat
it's like
to
a commodity.
essentially, yes, exactly. The real estate has now turned. I mean, real estate is a commodity, but people use it as a business now. So it's
Right.
become in a way, real estate has become a security, right? Because you're essentially trying to make a profit from the efforts of others using like the Howey test. Same thing with stocks. Stocks are, of course, securities. You're using the efforts of, like, say, executives, of employees. I think the issue with, let's say, stocks is that you don't get to take self custody. Let's say with your brokerage account, you're relying on your bank to not make mistakes, to not lose their records, and to make sure that the custodian doesn't mess up. Um, the U.S. government doesn't confiscate your stocks for whatever reason. I think there are some. Of course, there's upsides to that because they're companies. They're producing goods and
Hmm.
services, right? And they have this moat. They have this ability to produce goods and services better than everybody else. Like Apple. Apple has this ability to produce their phones in a way that gives their users, in a way, a sense of community, right? They can use everything with the same, um, I guess, the same ecosystem, and then they can work with. I don't even have an iPhone when I'm saying this, but people who are iPhone people, they always say iPhone is the best, right? And then they have that ability. They built that reputation over time. But then let's say Apple does something stupid where they completely ruin their reputation, and overnight you can't use Apple as a savings vehicle. You use it as an investment because overnight it could go to zero because
Right.
of the decisions of someone else. On Bitcoin, there is nobody at the top. There's nobody making decisions. There's no product being sold. Like, I don't have to create an Apple phone and sell it to someone in order to, or sorry, a Bitcoin phone and sell it to someone in order to make sure that the Bitcoin network keeps running, right?
Right.
The, I think that's the main difference. I get what you're saying with real estate as well. Real estate, you get that real thing. The issue with the problem that I personally see with real estate, I don't know, you tell me if I'm right or wrong on this, but problem that I see is that real estate can be built at will as long as we have the resources, as long as we have the land, we have the energy, the materials to build it. We can build more real estate, and if more properties flood the market, let's say real estate prices go up so much that developers are incentivized to build higher and higher buildings, and they can house more and more people, and then suddenly, I've heard some pretty bad things in the U.S. about people that are coming in, not in a racist way or anything, but not in anything like that. But I've heard some bad things in the U.S. I've heard some really bad things in Canada as well. More and more people are coming in. They're not assimilating, and they're essentially making certain areas not as ideal. And how do you know that that's not going to happen in your area? Let's say you own a bunch of real estate, and your building just loses all of its features. The people living there don't have the same standard of living, and that could be an issue, right? So when you buy these assets, let's say you buy real estate, you're buying something that gives you a little bit of risk. But the thing is, with Bitcoin, that can't happen. You can't change Bitcoin. You can't increase the supply. The supply is fixed forever. And
Well, for
what are your
some
thoughts on that?
well, for some cryptos, they do go to zero and they do stop. I mean, that would
Of
be
course.
my neighborhoods that I'm invested in de-gentrify instead of gentrify. That
Yes.
would be that example, right? Well, you can invest in REITs, you can invest in syndications, you can buy properties in different areas, different states. You can buy different kinds
Right.
of properties if you want. Now, there's an argument to be made for both. But I like short-term rentals, and so I primarily have short-term rentals. I like the state of Florida. By why I always wonder when there's a hurricane coming why I do, right? But I do. But if I really wanted to diversify more, I easily could. I could get a 16 unit long term rental apartment building in Valdosta. I could grab a quad that I can short term rent in Huntsville. I could, diversify that way. I can have long term rentals, I can short term rentals, I could go single family homes. And that's the answer to the supply and demand question that you're talking about. And it's a good one. But at the end of the day, I mean, if you this is what's so hard about building a property. You have the value of the land, and then you have the cost to build the building. The house I just bought, our land is worth about $500,000, and it would cost about $1 million to build this home. We paid $1 million for the whole thing.
Wow.
That's it's almost like the Warren Buffett way of thinking, right? Like this is how he used to buy companies. It was like on like asset value, right? If you add up the land and what it would take to build this place, and you pay less, then from an economics perspective, it should always at least hold that value. That's one way to
Yeah.
think about it. The other side is, yeah, we could build more. There's more and more land, but there's only so much land where people want to live. Most people want to be within 2 hours of a major airport, for example. And yeah, like you said, then they can go up. But most Americans want to live in single family homes. I think we've seen this in other countries. We've certainly seen it in Canada, where I think they're going more and more to townhomes. I think we may see more and more of that. But still, a single family home. I mean, you can only do so much, and with the way that zoning laws are, they can't buy this lot across the street from my house and build an apartment building there. You can't because of the zoning laws, and so there are still some constraints on the supply and demand. Um, but my answer to all of that is that's why we have my husband's engineering firm, that's why we have stocks, that's why we have real estate, that's why we have diversified quite a bit. So I have long-term rentals and short-term rentals, and some on the water, some not on the water, and single family duplex apartment building. We have some different things to that way. If I guess if the some Nicaraguans come and infiltrate one area, and that becomes Nicaragua light, and then my building goes from being worth $1 million to being worth 500,000. Overall, the impact on my overall net worth is stymied a little bit by the diversification that I have. But I just don't think in the United States, I don't think we will ever have enough single family homes for the people that want them. I think we can have housing for people, but I don't think we'll get to the point where we have enough affordable single family homes for people to live in.
The only so I get what you're saying. I completely get it. People do want to be independent. They want to have their own homes. They want to have their own area. The only issue is that rational. I don't know if rational actors will think of it that way. Let's say the price of a single family home goes to $20 million, and all you're earning is $100,000 a year. You're never going to be able to get a single family home, right? So
Mm-hmm.
I get what you're saying, completely valid. I mean, everybody wants I want a single family home. But the thing is that at a point, that dream just comes to an end,
Mm-hmm.
right? And then,
But that's the argument for owning a single family home now.
yeah, of course. But I mean, the way that I see it, if let's say you own real estate as an investment, you have them as short-term investments. I know a lot of people, they own real estate for long-term investments. They buy a house, they rent it out for as long as they can, they hold on to it. To me, that's a business.
Mm-hmm.
But a lot of people see their house as a savings tool. They see their house as a savings account, right? If okay, so let me ask you a question. What do you think your annual returns on your real estate portfolio were over the last 5 years? If you don't mind me asking.
I mean, it's complicated because we don't know what everything is exactly worth right now from the appreciation perspective. Then you've got the
Right.
cash flow perspective, the tax benefits perspective, and the loan pay down. It's got to be 25% at least.
25% a year.
I would
But
say it has to be. Yeah.
what if, let's say, what if there was, okay, so just a hypothetical, what if there was a way for you to, because I mean, of course, you know where I'm going here. I'm going into Bitcoin. So what if there was a way for you to not have to deal with tenants, to not have to deal with maintenance, to not have to deal with repairs, and you could literally do whatever you wanted, and you could, if you wanted to, you can go to a beach for a year, and just live there, and you don't have to worry about tenants burning down your house or doing something that just makes your house worth a lot less than it is right now, and you don't have to deal with insurance, you don't have to deal with lawyers, you don't have to deal with real estate attorneys, all that stuff. Would you take that opportunity, especially if you get a higher return?
Well, I'd be interested to see what the return on Bitcoin has been in the last 5 years. But you can get property managers, you can make it pretty passive, you can systematize like
Yeah,
crazy, and we have a lot of stocks for that reason. I mean,
of course.
we just sold one of our investment properties, and we put the money into the stock market to
Right.
make our lives more passive. Now, those returns
Exactly.
are average 10% per year. They're not 25%. I mean, you can always go into stocks. You can always
Yeah.
reallocate into stocks or even bonds if you want to go like super conservative. You
Yeah.
can do that too.
One
But
second. I'm
I
just gonna
think
find.
I think
Yeah.
I think it's okay for, and I believe I've said this before on Twitter or something, that I think having 1% to 5% of your portfolio in crypto is fine. And that's even relatively, I think, conservative. And I think that's okay. It's sort of how I feel about picking individual stocks too. I think most of your stock holdings should be, you know, broad-based index funds, but I think you can have some individual stocks. I believe in diversification, but you know, we all know the deal, right? Bezos didn't diversify, right? I mean, he was all in on Amazon until recently. I mean, I've seen his
Yeah.
real estate transactions and stuff, but you know, I mean, to get super, super wealthy, most people don't diversify. They go all in on some asset that they know a lot about, and they hit it big, and then maybe they diversify later. So I understand that argument. But I am just a tried and true proponent of some diversification, because if I had
Of
all
course.
of my net worth in short-term rentals on the west coast of Florida, the way insurance is and the way these hurricanes have been, that would have been very detrimental the last couple of years
You wouldn't be able to
compared to
sleep.
how it's been. Well, yeah, it would be hard. But that's what I'm saying. Whereas now, you know, only one of my units, only one of my buildings is in the way of this storm. Luckily,
Hmm.
it's been hit by that same town has been hit by storms the last 2 years, and nothing happened to my building. So there's that. But imagine if I had everything there. And the
Yeah.
property I just sold was on the water. I think it was at 7 feet. And the last storm surge we got put it at 6. And like,
Right.
I don't own that anymore. And I'm like, if that floods this week, whew, got out of
Oh,
that one. And that's the money
sorry.
that's in
Did
the
you say
stock market.
last storm? The last
Last
storm was
storm.
7 feet.
Idalia was. That was
Oh
last
wow.
year.
Okay, 7 feet. Wow. That would
It was 6 feet.
destroy everything.
It was 6 feet. Yeah, well, Idalia and then Debbie both hit where my apartment building is, and they were 7 feet and 5 feet, and they're projected at 9 for this
Yeah.
storm. And
Right.
Debbie was just 2 months ago. So that's pretty devastating. I mean, my building should be fine. The AccuWeather people are booked there, like
Yeah.
they are every storm. That's where they like to hang out, I guess, which is fine. And I'm very flattered that the AccuWeather people like my building, because it must be pretty safe if they keep booking it.
Oh yeah.
Um, but it's not good for my business, because you're right, real estate's a business. It's not good for my business if the downtown area gets hammered by its third storm in 2 years, right? So,
Right.
but I only have one building there. My other
Yeah.
buildings
Of
should
course.
not be affected by the storm. They're not, none of it's in a flood zone or anything, you know.
With real
But
estate,
if that particular island, let's say it didn't have these storms, let's say it just
yeah.
starts growing. Let's say Bill Gates like takes all of his money and invests it in this island, and it just goes to the moon. That would have been
Yeah.
way better if all of my investments were there, if
Yeah.
all of my real estate was there, if I didn't even have any stocks and all of it was just real estate there. But there's a potential downside for that. And I do feel
Of
like
course.
the Bitcoin crowd, the crypto crowd is very put all your money on that island, you know?
I don't even think it's all your money. I mean, you're already diversified. You already have, let's say, 1 to 5%, however much you have. You have a certain amount set aside in Bitcoin, and I think you're great for doing that. You're good. I'll show you some numbers after, but let me just show you how Bitcoin's returns have been. We were talking about that before. So over the last 5 years, 1 second here. Oh, where is it? Bitcoin to USD. There you go. Okay, so over the last 5 years, Bitcoin's gone up 672%.
Okay.
I think on an annual basis, this is something like 70, 80%, like, or something like that, which to me is just insane. And you're not doing anything,
Right. No, I hear you. But there's
right?
moments in there where it's been freaking horrible. And you know
Oh,
what?
yeah,
People do something. They do take action with that liquidity
they
problem. Like I
sell.
said, they sell
Yeah.
and they get
Like
freaked
this
out.
point right here,
Yeah.
down
Oh yeah.
74%,
Yeah.
right? But
That would hurt.
yeah, yeah. That's the volatility though, right? That
Yeah.
once you wrap your head around why this thing is volatile, it doesn't hurt as much anymore. Like for me, for example,
Also, with real estate, I mean, it's leveraged
yes,
returns, which
that's,
is a big deal.
I think to me, I think that's more of a problem. I don't personally like the leverage. I mean, it's just adding more risk, right? Because
I love it.
you could, of course. But I
I
mean,
would sleep worse if I didn't have $2 million worth of loans.
if I think you would see, the thing is that when you own Bitcoin, you don't need to take on leverage, right? Because your returns will be higher. Let me show you. I actually have a spreadsheet that I made some numbers on. Um, but yeah, but why do you like leverage so much?
Because why would I not borrow somebody else's money, invest it, and get all of the returns for myself?
Right. Okay,
Let's look at it
so
this way.
let's
Let's look at it this way. I could have paid $1 million cash for my house. Instead, I
yeah.
put $250 down, and I took out a $750,000 loan. What if I took
Okay.
that $750,000 loan and I put it in Bitcoin? You wouldn't be telling me that's bad. That's dumb.
I mean, I actually personally don't like that idea. The reason why I say that is because
So I
for
should
all
have
we
paid
know,
cash instead
I
of
would
having
no
that
no
seven hundred
no
fifty
no
thousand dollars in the stock market
for
and
real
real
estate and
estate.
stocks, you're good. You're fine. I think what you did was okay. I don't have a problem with what you're saying. I personally just don't like taking debt to buy Bitcoin.
Well,
The
yeah.
reason why I say that is because you don't know how low it can go. Let's say some
No,
whale just starts
no. For
dumping.
the record, I agree with you. For the record, I agree with you.
Right. Of course, of course.
Um,
No, we have to talk
but
about the
if
opposite side, obviously.
but if you wouldn't take a $750,000 loan on your house instead of paying cash, if you wouldn't put it in Bitcoin, what does that say about your confidence of a 672% return over the next 5 years? You're not that confident because if you were, you would do it. You would do it every time, no matter what the
No, but
interest rate was.
it's not about that. The reason why I wouldn't take that loan is because for all I know, Bitcoin could from here, Bitcoin could drop over the next year.
Mm-hmm.
And let's say Satoshi Nakamoto owns 1 million coins and dumps all of
Yeah,
his coins.
sure. Yeah, of course. That's
Why
what I'm
would I want
saying.
to borrow for
Well,
that?
that's the same reason I'm in real estate, not Bitcoin. Is
Right.
for that's the exact answer.
But then that comes to the other side of things where I don't need to borrow to buy Bitcoin because my returns are already higher than even the leveraged returns that come from real estate.
But it's not going to go to zero.
For
There's
what?
no Satoshi Nakamoto out there that can drop my real estate market like that.
I mean, I agree with you. I agree with you in general, but I mean, have you the way that I see it? The way that I see it, there are people who own thousands of homes.
Mm-hmm. Not
What's to
not
say
very
that
many.
they're not going to start selling?
There's not very many people that own thousands of homes. I mean, you're talking about like BlackRock. There's
Yeah.
not. I don't think there's enough individual actors that own enough of the market that they could move it. It's like the argument for people like we shouldn't have Airbnbs because Airbnbs are screwing up the market. It is such
Right.
a small percentage of the market that you can't move it. And here's the thing. With Bitcoin, it's all
Yeah.
investors. With real estate, it's primarily emotional primary homebuyers that need a place to live. It's really not. It's not really the investors that are going to that Investors can't crash the market because people will be, as soon as it goes down, people are going to buy because they want to live in a house.
But what if investors see that 1% of the world owns this thing and 99% of the world is coming, and they own, let's say, BlackRock. BlackRock has no morals. They don't care about real estate investors. They don't care about Bitcoin. All they care about is profits, right?
Mm-hmm.
And what if BlackRock sees that, oh, this thing is up 672% over the last 5 years? We're going to dump all of our homes and we're going to put everything we can into this thing because we think it'll go up another 10,000% over the next 10 years. What happens to the real estate? See, the way that I see it,
They
the
won't.
price is.
It just
Go ahead,
won't
go ahead.
happen. It just won't happen.
I
And
mean,
it won't happen. It won't go from 1 to 100%. It'll go from 1% of the world to 2. You know what
oh,
I
of
mean?
course, of
Like
course. But see,
that's how it'll
that's.
go.
I think that's the problem, though. Okay, so even if so let me give you an example with Bitcoin. If 10% of the holders start selling, the price is probably going to dump to like 20K, 10K.
Yeah.
Right, because that's a lot of
Yes.
volume. But
Right.
that's the same thing with real estate. With real estate, there's what percentage of the market is probably on sale right now? Maybe 0.5%,
Yeah, maybe. Well,
right?
what might
That
happen? What might happen in real estate is the people with the variable rate debt that aren't able to service their debt, which are going to be those apartment buildings and those commercial deals. I think
yes,
we will see movement there because you can end up in a situation where, especially if you're cross collateralized, you could have a situation where they have to sell and then they have to sell and then they have to sell and then they have to sell and
right.
so I think you could see that, but I don't think it will be across all sectors. I don't think it'll be across all geographies and everything I was saying. But you know what you mentioned earlier? You mentioned like
Mhm.
rational actors. I don't think it's a rational move if you believe Bitcoin is going to return 672% in 5 years. I think it is the most irrational thing I have ever heard that you will not go borrow every single cent at whatever interest rate you can get it at to put it in there. That's irrational.
I see the reason why I don't think that's irrational is because if I were to take on a loan and because Bitcoin is so volatile, to me, it's how do I know that if I take the loan out today and Bitcoin's price drops, why can't I take the loan out when Bitcoin's price drops? Right? Like right now, I mean, I'm not saying that Bitcoin's not going to go up to higher and higher levels. The way that I see it is adding a loan just adds extra risk. What if Bitcoin's price drops? Let's say, what if it goes sideways for the next 10 years and then it shoots up and then it goes to $10 million in a year,
Well, that is why
right?
people don't own it at all. That's the reasoning,
Why they
right?
don't own it?
Is the volatility, right? That's why.
Okay.
Like you're just
Yeah,
you're giving everybody's reason. Like if you like,
of
I guess my
course.
point is, if you wouldn't take a loan to buy it, that's why people don't even buy it in the first place. All those reasonings you just said.
Right.
What if you need the money? I mean, you can't put your I'm saving for my house fund in Bitcoin.
No,
You know,
definitely not.
I mean,
If you have a
I own
short term,
one building, and the whole point of that building is to pay off my other building in 5 years.
right.
Right? You can't do that with Bitcoin.
The way that I see it, Bitcoin is something that you're going to hold for at least 10 years. The supply and demand is there. I don't know certain factors. That's why I can't take loans to do it. But I mean, I'm okay with the volatility, right? To me, the volatility is an advantage. If I
If
don't
you
take a,
are
let's say,
if you were 99% sure that
yes,
in 10 years Bitcoin's going to be up another 672%. I know this is a 5. So I'm saying half of what it's
right,
done the last 5
of
years.
course.
You should take the loan. You should take the 10-year loan.
See, the loan, okay, the loan part makes sense to me. It's just, I don't see why I would add extra risk when I don't have to.
Well, that's
You
the
can,
point, right? Everybody has
right,
their hurdle rate. Everybody has what they're comfortable with. You are
right.
comfortable with these returns. Some people are incredibly, I mean, I am related to some of them. They are comfortable with a high yield savings account, 5%. It doesn't
Absolutely.
matter. It doesn't matter that it could be in the S&P and that the S&P has gone up 17% in the time that they've been getting 5. They still think that's the right decision. And that's it's relative for everybody. There's some people that would tell you 672% in 5 years, you should have gotten
yeah,
10,000% or whatever.
right. But see, the way that I see it, I mean, if they're going to keep their money in a high yield savings account, it's very likely that they may not understand that the S&P 500 is essentially a high yield savings account.
No, they don't
backed by
understand.
businesses.
Well, they don't think, yeah, they don't think it's backed by businesses. And that's the thing
Right.
too that I think crypto has done is I think it has convoluted some people's opinion of the stock market and what it is.
Yes.
Because with
Yes.
Bitcoin, you're basically betting the price of Bitcoin is going to go up. Period. With the
Right.
stock market, you are betting that the stocks are going to go up, but you're sort of betting the businesses are going to do better and better. But people have forgotten that those are two different markets. And I think I think Bitcoin actually has made people more scared of other investments in some cases.
Yes. So the way that I see it, there are a lot of ways that maybe the stock market doesn't keep performing. For example, if let's say the because Bitcoin is essentially designed the way that it's set up, the way that it's designed to be the world reserve currency or the world reserve asset. And who can guarantee that, let's say, oil producers continue to want US dollars for their oil, right? Because US dollars can be produced at will. Uh, to me, the way that I understand it, at this point, it's no longer speculative to own Bitcoin because you expect it to be the world reserve currency because there are countries that are already adopting it. Even the U.S. government has Bitcoin, right? And they don't own Bitcoin uh, because I mean they essentially confiscated it from people who were,
Right.
I guess, doing illegal
Drugs.
activity. But I mean they confiscate it, but now they're selling it, right? They're selling little bits of it because they want to own more of those U.S. dollars. They essentially want to support the U.S. dollar market, and to me that doesn't really make any sense when other countries are adopting it.
I think
I mean,
one thing that we don't know, let's say it
yeah,
is a foregone conclusion that Bitcoin becomes a world reserve currency.
yes,
Even if I give you that assumption, here's an example for you. I
yeah.
bought a duplex on the south side of St. Petersburg, Florida. It was a terrible idea, but it was only a mile from the Rays Stadium. And I'm thinking, this thing is going to appreciate. This area is eventually going to get better. It just absolutely has to. But the problem was, I did not know how long that would take.
Yeah.
Right. And I wasn't able to ride it out. I wasn't able to ride it out until that actually happened. I mean, I ended up more than doubling my money. So it worked out okay. But it didn't do what I thought it was going to do in the amount of time I thought it was going to do it. And that's the question about the world reserve currency. I mean, will you be alive? You know, like
See,
it's so
that that's
young still, right?
that's part of why I don't that's part of why I don't like taking on the debt to buy the Bitcoin, right? Because once I have it, there's no maintenance cost. With real estate, you still have to make your payments, you have to pay for maintenance. If you don't pay for repairs, you still have to continue doing all that, right? So if somebody were to own real estate, let's say they were to own a ton of real estate over the next 10 years, how much of the money that they spend on the property is going towards interest, and how much of it is going towards maintenance and repairs? How much of it is going towards things that don't actually lead to profits or to an increase in purchasing power?
I mean,
To me,
60%,
that right, to me that's a massive. And then even if you don't have a tenant, you're
but
still
it's
paying that,
leveraged. But it's
right?
leveraged.
Exactly. So
So,
you're there's that risk. There's the risk that, let's say, you don't get a tenant, and let's say people don't want, let's say, like you said, degentrified. It the area gets worse. You
mhm.
have all this debt. But then I know you're smart enough to diversify, but then there's people who have one property, and that's the only property they have,
Well, they shouldn't.
right?
No one
And
should
I
have
mean,
one property. That's how I feel
exactly.
about
But
it.
what I mean is
I think you should
one
have
rental
5.
property.
I think you should have
But what I
5
mean
rental
is
properties. If you're gonna have one, I
what I
think you
mean is
should have
one
5.
rental property. So let's say they
Yeah.
have one rental, they have it in one area, they took on this debt and they bought it, and now the area degentrifies. It gets worse. There's a hurricane in the area. They didn't do their research. Now they're bankrupt because they took on the debt. Right? I mean,
Yeah.
I'm not saying that that's the situation for
Well,
most people.
that's why. I
That's
mean,
one of those scary
you're
situations.
comparing real estate to Bitcoin. The Bitcoin, though, that is not the foil for real estate. The foil for real estate is the stock market or high yield savings accounts.
What do you mean the
That's
foil?
that's where the opposition. That's the comparison. That's the control group. It's not Bitcoin. It's because it's the risk reward. It's the typical risk reward from economics that we've all heard about. Bitcoin is so risky. so volatile that the return must be higher than real estate. And real
But
estate, the
volatility is not
risk,
risk.
volatility is risky to people. That's why you won't, okay, let me put it this way. You won't take on more risk because of the volatility. It's basically the same thing.
I don't need to.
But you won't. This is my point.
Okay. Yeah.
The volatility of Bitcoin versus the amount of risk that you take on for real estate versus the amount of risk you take on for the stock market versus the amount of risk you take on for a high yield savings account versus the amount of risk you take on for a treasury bond, all of those are in descending order of the returns that you get because of the nature of the asset. Those are the laws
Right.
of economics. And that's why. It's because Bitcoin can go down 74% in 1 year that it can go
Right.
up 672% in 5. That's why. It's all related. That's the same, but
Of
that's why
course.
real estate, you get your returns are 25, 30, 40%, whatever, depending on your leverage, your appreciation, cash flow, tax benefits, all of those things. Because it is more work and it is more risk than the stock market. Because if the stock market was the same amount of risk as real estate, then they would return the same. That's why the stock market is at 10. And that's why high yield savings accounts are 5, and they really shouldn't be. They're going to go down. And that's why, treasuries are lower than that. And that's the point, right? It's because it's just the nature of the asset. It's all just the laws of economics.
The way that I see it, I mean, once you at a point, once you really understand how it works, the fact that it can't be taken down at this point. There's no way for Bitcoin to just go to zero.
No, I agree. I think there was, 2010,
of
2011,
course.
2012. Yes.
Oh yeah,
Agreed.
yeah. Back then, yeah, absolutely. But like, if you even look at, do you remember FTX?
Yeah, I lost $5,000.
The token,
I remember. Yeah.
their token is still trading. Even though FTX has gone bankrupt, they're still trading, which to me is crazy. So just based on that, Bitcoin can't go to zero because it's a supply and demand thing. But then you have to look at it from.
But I don't think Apple can go to zero. I don't think my apartment building can go to zero. I mean, I don't think much can go to zero.
If there's a hurricane, an apartment building can go to zero.
You're insured.
But what if the insurance company is over leveraged and they can't pay you back?
There's literally things in place for that. Like the government, then the state has their guarantees of it.
The state has. How does the state guarantee? Sorry,
they have funds. It's almost like a reserve, like you would have in so you can prevent like bank runs and things like that. It's the same thing. Yeah. They have literally a fund, and everything is heavily underwritten such that it can't, even if they go bankrupt, they have the guarantee, and then I forget what the body is that steps in.
But what's the guarantee backed by?
What, the government? The United States government, the most powerful government in the history of the world.
Of course,
with the biggest guns and the most nukes.
All that stuff is important, but to me, it's backed by trust. Like, you trust that that's going to happen, right?
It's backed by the trust of 7 billion people. That's a lot of people.
It wouldn't be 7 billion people. It would be Americans, because Americans.
6 billion.
Sorry, go ahead. No, you're right.
I'm just saying, China keeps buying our debt. They trust us.
Yes.
They trust our fiat currency. And then I don't know what India is doing, but if you just add those up, that's half the world.
Of course. No, China has what, $1 trillion worth of their debt, something like that. But even then, again, what if China starts dumping their treasuries?
Yeah, well, that's all a fair question. At the end of the day, my apartment building, it's not going to go to zero. You're telling me you wouldn't pay me any Bitcoin for my apartment building?
I mean, right now I wouldn't, because to me, Bitcoin is...
But somebody would.
Let's say 10 years from now. Based on just charts, what's your apartment building worth today?
$1 million? I don't know.
Okay.
This is there's no ticker for this, right? But let's say $1 million.
Let's say $1 million. So let's say, what is that? 18 Bitcoin?
Don't know.
18 Bitcoin. I think
it's 6 units where 6 different families can live.
Right.
And would be willing to pay you something.
Yeah.
Even if it's Bitcoin, or even if it's gold, or if it's wheat, or whatever it is. There's still going to be people that are alive that need somewhere to live. And they'd be willing to pay you something to live in my apartment building. So let me put it this way. Let's pretend, for the sake, I don't even know. I can't do like Bitcoin math here, but let's pretend that you can make 1 Bitcoin a month from renting to these people. You would pay some amount of Bitcoin for that apartment, even if you don't like real estate. Even if it's like, even if it's like 4 Satoshis or something astronomically small, there is a level where even you would want it. Do you see what
Oh
I mean?
yeah.
And that's why
No, no,
it
I get
is
that.
going to have value because people need to live somewhere. Like
It will. It will.
even if they're not paying with, but right, it's worth $1 million now. I get your point. If it collapses,
Like,
maybe it's only worth 500,000 US dollars worth of Bitcoin or whatever instead of a million, whatever, 9 Bitcoins
I
instead of
mean, in
18.
terms of dollars, your property is going to go up forever, right? It's probably at some point in the future, it'll be worth $10 million. It'll be worth $100 million because, of course, U.S. dollar keeps decreasing in value. But over
Mhm.
time, the way that I see it, the utility that your building provides, that the business that you're building is fulfilling, can be fulfilled by another building.
Well, it's the only building on the island right now, but yes, sure.
Oh, okay. I didn't know that part. Okay, so that's. I mean, you have great location in that case, but not everybody does.
Well, yeah, there's condos and there's
Yes,
single family homes and there's our apartment building.
right. Like, I think in general, the way that I see it, I mean, I think you're doing. I think you made a smart decision by owning something that has its own, I guess, moat. But most people aren't doing that,
No, no, I know. I tend to agree. I tend to
right?
agree with you. For the record, I 100% agree with you that there's a lot of risk in a single investment property in a single
Yeah,
home. That's why, that's why they say buy duplexes instead of single families. Because if one's empty, you still have somebody paying you.
yeah. You
Buy
get some of your
quads
mortgage.
instead of duplexes. Buy 6 unit apartment buildings instead of quads. Buy 10
Hmm.
unit apartment buildings, 6 unit, right? Because you are decreasing your risk by having more units, even if they're in one place.
Right, right. I completely agree with that. See, I 100% understand what you're saying. The fact that you're getting cash flow, that's very important. You're getting a certain amount of cash flow, but over time, see the again back to BlackRock, back to all these hedge funds that own real estate. If they had the choice, would they choose to buy something that they have to maintain to get a lower return, or would they choose to buy something that they don't have to do anything with? They literally just put it into a vault. It's there forever. They don't have to do nothing, and they just keep getting paid. It's like, well,
I think if they felt that way, they would own the stocks.
even stocks, they have the risk, right?
But
Like the
what real
company,
estate has is a lot more predictability.
yes. So they have,
I can put my 6 unit apartment building in a spreadsheet and make
yes,
some assumptions, but they're very likely assumptions. You cannot
right,
put Bitcoin in a spreadsheet for me. You can't tell me, here's what I'm going to do. Look, Lauren, I'm going to retire at 45 and then I'm going to use the 4% rule on my Bitcoin. And then I'm going to do this and this. And you can't do it. You can't do it. That's why BlackRock and pension funds and stuff need predictable cash flow, and individuals need that
yes.
too.
I actually made a spreadsheet for that, and I deleted it by accident. I actually made a video about it, but there are ways to I guess model that out. There are definitely.
But you're not confident enough in it to take out a loan and invest in it. I'm just saying, you're
It's
not
not.
that confident about the future
No,
of
no.
Bitcoin.
It's not about confidence. It's that I don't want to. I don't want to add more risk to my portfolio because if I don't,
But the reason it's
what's
risky
the?
is because you can't predict it.
But
That's why it's risky.
if I can get a loan at 0%, how do I know that the lender is not going to call that loan? How do I know that they're not going to increase the rate on that loan? How do I know that they're not going to
Well, that would be in
uh,
the loan documents.
market to market? Like let's say I buy Bitcoin with a Bitcoin backed loan. Let's say the lender starts marking it to market and they sell my Bitcoin and I'm
Well, they
left
would,
with this
yeah.
loan,
Well, if you're gonna take a margin
right?
loan on your Bitcoin, sure.
Of course,
But
right?
yeah, no, I'm just saying. Well, they're not gonna. They can't just call your note. There's. Yeah. I'm just
They
saying.
can do whatever
My
they want
point
to.
is, if you are
Yeah.
not, I mean, I don't know. If you can't predict what Bitcoin's going to do next month or the month after that or month after that, how can you plan for your retirement off of it in
But
10, 20
that's what I'm saying.
years?
Over 4 year periods, Bitcoin's always gone up. if you look at I can actually show you a trading view chart. It shows
Well,
you,
the stock market's always gone up, what, over 20 years? And like
yeah,
99% of the time over 10?
99%. Yeah,
Something, I don't know
yeah.
how much. I don't really know what the
Of
numbers are, but
course,
yeah.
but even that you can't. I mean, the stock market is giving you 10%, 12% returns. There's a lot of risk behind it, though. That's the the way that I see it. If a company makes the wrong decision, you're kind of screwed. But then you're diversified. But then you're half the companies that you have in the S&P 500 are producing nothing. Like half of them are just
But
either stagnant or trending down.
you could be screwed at a moment like that in Bitcoin too. I mean, if you bought a ton of Bitcoin at 73
Yeah.
and it's at 40 when you for some
Yes.
reason need, I mean, theoretically you need this money that is in there.
I
I mean,
wouldn't.
theoretically you need this value. You're planning on using this store of value for something in the future. You don't just like
I wouldn't put
you
money
don't
that
just like looking at the charts. I mean, it's for a reason that you're doing that. Theoretically,
I mean, if I
because you
need
need
money
it in
for
the
the
future.
future, let's say I need money to pay my bills, or if I need to put money down on a house, I wouldn't put that
Mhm.
money into Bitcoin because it wouldn't make any sense. I need short-term liquidity.
But what's the
Bitcoin doesn't
Bitcoin
give you
for then?
short-term. Bitcoin's
What's
for
your
long-term savings,
but for what?
long-term liquidity.
But for
Let's say
what?
10 years from now, my
And then
savings
what?
account,
Yeah, and then what?
and then you can spend it. You can
When you
sell it if you want to. You can
yeah,
spend it directly.
well, you eventually
I mean,
need
that's
it.
what,
You
of
eventually need
course,
it. So that's what
10
that's
years from
my
now, yeah.
struggle with it is, I need to know what I need to make assumptions. If I pay off this property, my cash flow will be this. If I don't, and I refinance it when the balloon is due, and I don't sell this one, what's my cash flow here? What's my cash flow here? What's my cash flow here? If we sell the engineering firm, we'll break off this much. What should we do with that? And I have these different scenarios for
Hmm.
my financial future. I don't see how you can have those with Bitcoin. You'd have to it'd have to be like a game time decision in 10 years. Well, we'll have to see what the Bitcoin's worth and then we'll decide what to do. You
Well,
know?
the way that I do it, let's say I need some cash flow. I have enough Bitcoin at this point that I can sell a little bit
Mhm.
if I need to have Bitcoin. If I had real estate, I wouldn't be able to do that. I'd have to go to a bank. I'd have to get a loan. I'd
You
have to
wouldn't have
set
to
up
do
that
it
loan. I
because
have to
you would
go.
have cash flow. That's
I
why
mean,
you wouldn't
I
have
don't.
to do it.
That's if you own real estate properties. But what if I don't want to manage rental
No,
properties?
no, no. I'm just saying. But like with real estate, you would just simply
Yeah.
have cash flow. You wouldn't have
I
to
mean, but what
sell
if, let's
anything.
say, okay, so let's say you have let's say you have cash flows, and then something happens where you need more cash flow. What are you gonna do?
What would I need it for?
Let's say you need a repair. Let's say you need to repair something.
Um, well, enough of the cash flow is after repairs and maintenance.
Okay. Yeah, that makes sense.
So
I mean,
yeah,
that
so
makes sense.
part of you put what you're supposed to do. Like imagine you have a roof in 30 years, so you have to put
Yeah,
$200 a month into an account for the roof.
like a sinking fund,
Yes, and so that's there,
of
and then the
course.
cash flow is after that. So I'm just saying,
But
like
see,
that's yeah. Sorry, go ahead.
that's what I don't understand. Why make your life more complicated? Why have to do all of that when
Because
I'm
I
not saying that you should
know
do that right now. Remember, I'm not saying that you should do that all with all of your money. Where I'm coming from here is if you could find an easier way to save, then I mean, I get you have your reasons, you have your
well,
diversification,
I
but
left
you did a
my
lot of research
I
into
left my
getting to that
job. I
point.
left my job
Right,
last year. Are you
right.
comfortable
Oh,
enough
yes, I remember.
with Bitcoin that you can leave your job and you could plan 12 months from now what you're gonna have?
I
No.
left my job 3 years ago.
Yeah, so okay, so where do you make it? How are you living? What are you doing? You're doing this. You make money on the
Right.
content creation and stuff. Yeah, so you have
Yes.
to work. Whereas I
Of course.
just make money on my rentals. And I knew 12
But
months ago what my cash flow was going to be this month.
see, to me that's a problem. I get you benefit from it. I get as a real estate investor you benefit from it. But what if the people that you're renting to don't want to rent your property anymore? What if nobody wants to rent that
I
specific property because it can be
have
replaced,
I
right?
have the fund.
If
I have the fund and I
I get it.
simply turn it over. I go to the open market, the open capitalist market, and
Yes,
somebody will rent what I have for them.
I get it.
And I have enough money in
But
my sinking fund to flip the unit without affecting my cash flow for the month.
right, all that stuff, all that stuff is fine. But what if another? What if more? See, this is I think this is the main issue with just basic With real estate, there's always a replacement. If there's a replacement, the value of what you have will decrease. People can build more houses. People can move to a different area. Uh, they can maybe prefer to live in a different area. Let's say people in New York City. They own tons of buildings. They have tons of properties in skyscrapers, and they're relying on their government to continue to say that nobody else can build in the way of their view. If that happens, how much value would their property
Well,
lose?
in New York City,
There are a lot of assumptions.
in New York City,
No, go ahead.
you actually own air rights above the building next to you.
Right.
But yeah, that's neither here nor there. No, I understand. But I don't think you're thinking about Bitcoin. You're thinking of Bitcoin as having no substitutions, but as an investment vehicle, it does. I can put my money in there. I can put my money in here. It's like what you were saying about BlackRock. BlackRock could decide to sell their real estate and put their money in Bitcoin. Everybody could
Yeah.
suddenly also hate Bitcoin and decide to put their money in the stock market or real estate. If you use that argument, it could go the other way.
But it's not about hating it. It's about to investors. It's about getting the best risk adjusted return. And then once you go deep into Bitcoin, you kind of understand that there's almost no risk to this. It's actually like if once you see the value of just one Bitcoin equals one Bitcoin, the dollar value, you get rid of the dollar lens, you can see that over time it's the most stable asset in the world.
We can't get rid of the dollar lens if we're doing planning and we have to pay our bills in dollars next year.
But okay, so let's say if real estate was more liquid, do you think that the price would be as stable as it is?
No, that's the whole point.
Right, but that's a problem, right? Not everybody has access to real estate. Not everybody can wait 3 months to get cash flow. So if they had the choice, or let's say you own a property and you need to sell one of them, you need the money right away. Otherwise, let's say your other property is going to get foreclosed, you need the money right away. You can of course take a loan. That's an option, but some people are so over leveraged that they can't take any more loans and they have to sell their property.
Obviously,
right?
you should have emergency funds, and you shouldn't be over leveraged. Yeah,
but the benefit of Bitcoin comes from that point, right?
Couldn't the same thing happen to somebody with Bitcoin, where it's like they bought in at 73 and now they need money?
No, they can sell it. Of course,
yeah,
they can sell it, but they're not they don't have leverage. That's the problem. Sorry, that's the thing. That's the difference here.
You should never be at a point where you have to sell your property for less than the loan amount on it.
See, you're talking about rational investors. You're talking about somebody who's completely informed in personal finance.
Well, that's what you're talking about. You are talking about rational. No, you're talking about rational investors. You're talking about like perfectly rational humans who are looking to get the highest return for their risk and work that they do, and that is irrational of you to use that rational argument, because nobody's rational. Some people just don't like it.
So do you think that, let's say BlackRock, they see that you can make 20-25% on their real estate properties, and they have to take leverage?
They might make more. They probably make more.
Let's say they make 30%, 35%. And if instead they could just hold Bitcoin, and they can hold as much of this as they can, and they know the exact supply, they know that this thing can't change. Like Fidelity, for example. Fidelity is pretty respectable, right? They predicted $1 billion Bitcoin by 2040.
Okay. I mean, that,
right.
Whatever. I don't believe any predictions anybody gives me. But
of course.
I mean, yeah. But like, so given what you've said, BlackRock should have already done it.
I don't think they quite understand it yet.
That's the argument every Bitcoin person has, is they just don't understand it. But what if thousands of the smartest financial minds in history at BlackRock, what if they do understand it and they still haven't done
it? They're gonna be priced out, right? They're have you seen the chart for? I wish I could show you the chart. It's real estate versus Bitcoin, stocks versus Bitcoin. A house was at like 64,000 Bitcoin in 2011. Today it's at like 7 Bitcoin.
Mm-hmm.
Right, just based on that, eventually it'll be 5 Bitcoin. It'll be 3 Bitcoin. It'll be 1 Bitcoin. I mean, I get it. It's just an investment vehicle to most people, but
yeah. Well, that's the thing. So you've told me a couple times on this call that people have been priced out of real estate. So people get priced out of Bitcoin. So what?
People get priced. They get
then
priced
they're just
out of Bitcoin,
gonna
they can
do
buy
something else.
They can buy any amount though. They can buy $1. They can buy 50
You
cents.
can
They can buy
you
20
can
cents.
you can buy tokenized real estate. You can buy in on a you can buy $50,000 of a syndication. You could buy a REIT. I mean, you
But
can do
again,
that.
a REIT, it's not decentralized. You don't have self custody. You're relying on somebody else to hold it for you.
Yeah, I get that. Most people rely
Yeah,
on somebody else to hold their Bitcoin.
they do. They do.
I mean, I'm just saying. And even
They
if
do.
you have it in cold storage, you've got to throw it into warm storage. I don't know what that's called. You've got to throw it into an exchange to use it
In
anyways.
exchange to sell
So,
it. Yes.
yeah. So,
I mean, I get. Okay, so I think both
you
of
know, I'm
us.
just giving you a hard time for the sake
Of
of it,
course,
right?
I know. I like it. It's a good thing. It's a good thing. See, that's the thing. I feel like it's a good thing because it makes me think as well, right? Because if you ask me these questions, there's definitely hundreds of other people asking the exact same things, and I mean the way that I see it, all of these are. I think Bitcoin is it's the future of money. I would say, and of course, you're already diversified, so you're good. I actually want to show you one other spreadsheet that I made here.
I feel like
One
I'm
second.
saying dumb things, and the
No, you're not.
listeners are like, wow, this girl's an idiot. She just doesn't
No,
know.
no,
She just needs to learn more. She just needs to
no. They
research
don't.
more.
They don't. I think it's a good thing that you're asking these questions because a lot of people have these exact same questions, and if they can't be answered, then this isn't the future,
Right.
right? I mean, I tried to answer them. Maybe I
Well,
should have.
that is the
Maybe I
thing.
needed to do a better job.
That is my point with a lot of the rhetoric online. I'm mostly active
Yes,
on Twitter X. Is you just don't understand it, and I'm
right.
like,
See, most
okay,
people who
but
say that they don't
why?
understand it themselves,
Well, exactly. I'm like, well,
right?
why? Why don't I understand it? And if I mean, we all know it's Warren Buffett, right? Won't invest in anything he doesn't understand. If it's that complicated, I mean, I'm not like a genius, but I had a 3.94 GPA in college at one of the best public
Yeah,
universities in the country. I mean, I'm not dumb. I may not be
yeah.
very smart. Maybe I'm kind of medium, but I mean, I have understood a lot of concepts after reading about them as much as I've read about Bitcoin. And whenever I've been confused about another topic, nobody's answer to me is you just don't understand. That's like the only space where people are like, you just don't understand. I'm like, well,
I
maybe
think
it's
the
too
reason why they
complicated.
say that I think the reason why they say that is because there is so much time that has to go into it.
For
Like
sure.
for me,
Well,
I'm
and we're
still
just talking mostly about Bitcoin. Like if you
yeah,
start branching into other cryptocurrencies, like it's
yes.
infinitely more complicated.
The only one that I like is Bitcoin because it is the one that's the first one, the
Yeah.
fully decentralized, the first one that actually worked. And because I think it does have the biggest network effect. Like I have friends from there's a guy who I talk to regularly. He's from Nigeria. They used to save in dollars, but now they only hold Bitcoin because dollars are getting devalued. Nigerian naira is dying. It's just going down like 30-40% a year. So
Yeah.
to him, it doesn't make any sense to hold naira
Right.
or
I've seen
dollars
that.
because he has Bitcoin, right? Because in terms his spending is in terms of Bitcoin, or sorry, his spending is in terms of naira, and whenever he needs to spend money,
Right.
he holds on to Bitcoin, and it works so well for him because over time
I'm
his purchasing
sure
power just keeps going up.
and I'm sure the people in Afghanistan wish
Yeah,
that they had Bitcoin when we left, right? Because didn't their government confiscate
yeah,
everything from everyone? Like,
exactly.
I understand that use case. I do. I have a hard time thinking the United States government is going to take my assets.
See, when if they get desperate enough, you don't know, right? Like with their
Yeah.
debt, they owe China $1 trillion, and if China doesn't want to own that debt anymore, it has to sell it, right? And that's see what that's going to do is it's just going to add a flood of treasuries to the market, and the Federal Reserve is going to have to print more money to buy those treasuries and decrease the interest rates, which to me is really scary because it could mean that the U.S. government is in a debt spiral that they never get out of.
But everybody that's holding Bitcoin in the United States, that's all holier than thou over that. They still have their butts in the United States when this goes down. And it's not good for
Most
them either.
keep in mind most people who own Bitcoin don't actually understand it. Like they have no they don't understand it. They just got like I said, they just got lucky.
Well, they're also just doing like basically price speculation on it. Like I
Right.
get that.
And all that is going to be redistributed. It's not gonna stay with those people. Those people are gonna lose a lot of what they have. So this I wanted to show you this. So I was doing a little model here. If you have a 20-year time horizon, so in in the last few years, Bitcoin's gone up 80% per year. I'm just going based on 35% for the next 10 years,
Mhm.
30% for the following 10.
And this
And then if
includes
the stock market has, sorry, go ahead.
the halving somewhere
Yeah,
in
this
there.
includes the halving and
Yeah,
everything. And then if the stock market gives you a 7% return,
that's
this
inflation
is
adjusted, but yeah,
if you have, I think it's like 10%, but after inflation,
yeah,
it would be
yeah,
around 7-8%.
yeah. Agree.
But the way that I looked at it was, if you have a certain allocation, here's what you'll end up with. If this works out, I mean, if it's better, it's better. If
Okay,
it's
so
worse, it's
those
worse.
are, it
So,
says dollars, but those are really percents.
yeah, percent. These are
Okay,
percent. This is the initial dollar allocation. Let's say you have
right,
$1 in Bitcoin
right,
and $99 in
got
stocks.
it, got
This
it.
is what you'll end up with. But
Yep.
right, like you said, they're percentages.
Yeah,
So
gotcha.
60% in Bitcoin and 39%. But
Hmm.
let's say you have 5% in 20 years, your portfolio is going to be 88% Bitcoin, which to me it blew my mind, right? Because
Yeah, that's like
if
flip flop.
right, it's a complete flip flop, and the higher you go, of course, the bigger your allocation ends up being. So you have 7%, it's at 91%. So I don't even think you need that much to do much with this.
Yeah,
But
that's
if
a
you
good
do
point.
have a lot more, I mean, you're taking on. I mean, most people would say risk. I personally don't think it's risky, but let's say you're just concentrating all of your wealth in one thing. Of course, you're going to get the bigger return, but you don't need to do that. That's the
Yeah.
best part of it.
Well, what did I say? 1 to 5% of
Yeah,
your portfolio, right?
exactly. Right. So
That's
if you
this
had
bear
what
this
if you
bears
had
this out.
yeah, if you had 5%, you end up with 88% compared to stocks.
Which I am
Eighty-eight
not.
percent in.
I have $1,000. That's not 1% of my
Oh
portfolio
yeah,
at all. But we did have like $10,000 in it, but it was an FTX. So
yeah.
there you go.
Oh, okay, okay.
So that's
I mean,
gone.
what I would say is, if you could if you're comfortable with it, get to 1%.
Yeah, that
But
was the
eventually,
goal. That was the goal.
even
And
if you
then
don't,
FTX went out of business and took a lot of our money with it.
yeah.
So
What I would do is, I mean, I think you're on a great path because you're already diversified. You've asked a lot of questions, and I think I have a feeling that you will eventually uh like this more.
I'm keeping an eye on it.
Yes, keep an
I'm
eye on it. I
Bitcoin
would.
curious.
Yes, yes, yes. So I would say, if you can get to 1%,
That's a good
right? I
goal.
mean, that's
We
the
have to get
worst case.
the taste FTX out of our mouth first.
Right, of course. I would say get to 1% and put it into cold storage. But I think even if even with what you have more than what the average person has.
Yeah, that's true.
So
I think my husband
even
has the 5,000 on the ledger. I think is what he
oh, there
has.
you go.
I'm
Yeah,
pretty sure.
that's I think that's a great allocation. If it does eventually, let's say I'm right and it becomes the world reserve currency, then you have a really good amount of Bitcoin. But if it doesn't, then you don't lose much.
Right. That's how we feel.
Yeah. All right. I think that was a good conversation. Anything that you wanted to talk about? Anything else?
Um, no, I think I told everybody at the beginning kind of who I am and about the
Yes.
Adulting is Easy podcast. And
Perfect.
hey guys, follow me on Twitter at Adulting is Easy. I'm usually around.
Great content.
I'm very authentic. I'm not very girly. If you're looking for girly type content, I'm not your girl for that. But super passionate about personal finance in all aspects. Definitely a bent towards real estate lately for sure.
Like I said, we've known each other for what, 4 years?
Years. Yep.
And I mean, if we're not having conversations like this, I think a lot of people probably learned a lot. I learned a lot about real estate, about how you think of real estate from this conversation. I'm sure a lot of people learned about real estate as well. I'm sure a lot of people learned a little bit about Bitcoin, and that's exactly what we want. We want to keep spreading the knowledge, and everybody who's watching this, just follow Lauren. Um, even if you don't like her posts about real estate, it's fine. It makes you think. That's how I see it. Awesome. Great talking to you, Lauren. Great having you on here.
Thanks for having me.
I appreciate your time.